Last updated yesterday, Tuesday, February 28, 2023, the FDIC.gov provided remarks by FDIC Chairman Martin Grunberg on the infamous fourth quarter 2022 banking profile and privately held meeting. There's been footage leaked and shared and floating all over the internet from news and media outlets, independent content creators, subreddit forum groups, and even redacted reported on what all was discussed and said about the FDIC, the banks and their liquidity crash, and planning and preparation for banks to collapse on a Friday. So needless to say, this is an extremely important and urgent warning that I hope everyone is paying very close attention to. Please, everyone, tell your family to prepare. The full year and fourth quarter 2022 performance results for FDIC insured institutions has been released, and the banking industry reported a continuation of persistent economic uncertainty. With the year-over-year decline primarily due to high provision expenses, which are the amounts set aside by institutions to protect against future credit losses, or better described as bail-ins. You all may recall a video I published just this past fall where I broke down how major national Wall Street banks like Bank of America, JP Morgan Chase, Wells Fargo, and others were boosting up their cash reserves in preparation for a major credit collapse. And I'm not talking about ones and zeros here, folks. I'm talking about greenbacks. Cash is king, baby. And even here recently, Bank of America's CEO, Brian Moynihan, has been much more vocal in voicing his concerns for our financial system, economic stability, and the likelihood of pain being felt by families and businesses as we head full speed towards this crash. High inflation, a recession, a depression, a time where the low-income, minimal savers, less resourceful, poorer people, families and individuals and businesses are on the brink of intense suffering as the banks prepare to protect themselves from the new start of a financial and economic civil war. So please allow me to reiterate, as I can't stress this enough. If you bank with any of these financial institutions, have money in savings or checking, or maybe even a certificate of deposit with banks like Wells Fargo, Bank of America, Chase Bank, Truist Bank, Renaissance Bank, PNC Bank, Fifth Third Bank, and other well-known large national banks, please pay close attention to the breaking news, information, and urgent update I have to share with you all that will definitely impact money in the banks in some way, shape, or form in the very near future. For all those who procrastinate and don't heed the warnings, then sadly their futures may not be so bright, and the less fortunate, as the banks are all working together to bring forward a new era, a new regime, a great reset. CBDC is getting the finishing touches, and ESG is following up right behind it. Don't let them wipe you out, because they're preparing to shut it all down. So listen up, folks, because not only are all these banks closing down branches left and right in cities all across America, but they will have a strong and lasting direct impact on all these people, and for one very alarming and specific reason, and I'm pretty sure you can all guess what that is too. So if you bank with any of these financial institutions, have money in savings or checking, or maybe even a certificate of deposit or CD with banks like Wells Fargo, Bank of America, Chase Bank, Truist Bank, Renaissance Bank, PNC Bank, Fifth Third Bank, and other well-known large national banks, please pay close attention to the breaking news, information, and urgent update I have to share with you that will definitely impact money in the banks in some way, shape, or form, and in the very near future. And I have some very shocking information that was just leaked, and new updates by the FDIC themselves that they aren't even trying to hide anymore, folks. Their intentions and their plans are real. They're preparing to do the unthinkable to all these people, and if you're not paying attention, then you just might not survive this next wave of what can only be described as a correction, or better yet, a purge. These banking giants, beasts, are marking their territory, and when the smoke clears and the dust settles, there will be winners and there will be losers. My question for you is, which side will you end up on? Now, we are about to witness and experience major changes that are happening to the banks, of epic proportions. The future of money and just how safe your cash is locked away in their bank vaults and tied up as ones and zeros on their digital ledgers. So stay tuned because I'm going to tell you all about it and you're not going to want to miss any of what I have uncovered in doing my research, and I will share with you all. And thank you all for joining in on today's video and tuning in for your daily dose of the truth. The truth about what matters to you most. And if you're new to the channel, my name is Kevin and welcome. On my channel, we discuss, investigate, plan, and prepare for all things finance, money, economy, savings, investing, building wealth, building businesses, building YouTube channels, and other monetized income streams, diverse income opportunities, passive income, CBDC, the central bank digital currency, crypto, Bitcoin, BTC, Ripple, XRP, real estate, mortgage rates, the housing market, retirement, affordable housing, SSA, SSI, SSDI, EBT, SNAP, food stamps, welfare, government stimulus, and other welfare handouts, and so much more. So please smash the like button and subscribe to the channel and help me reach the goal of hitting 70,000 subscribers. Thank you all so much, and you're all so very important because without you, none of this would be possible. And everyone who's been asking about how I protect, secure, and diversify my assets and investment portfolio, I want to share that I continue to diversify my portfolio and my investments because you just never know what they're going to do to us next. The days of the dollar as we once knew it are numbered, and the new central bank CBDC digital currency will be here before you know it. And I want to make sure I have options. Now, I hope you are all doing the same, and I have included links in the description down below to Genesis Gold Group for anyone interested in looking into ways of diversifying, just as I do every single day. And I'll tell you what, I know that I sleep better at night knowing I have made the right choices for me and my family. They make it simple and easy to diversify and not only invest in one of these financially strongest precious metals, but more importantly, if you are like millions of other worried and frantic Americans right now, looking at this crazy economy and their retirement investment portfolios and wondering just what they're going to do now, if you are concerned about this economic storm and how your IRA and 401k will fare during these turbulent times, top experts are predicting now is the time to be protecting your assets with physical gold and silver. Find out why Genesis Gold Group is the #1 recommended company by your favorite preppers and homestead channels. Receive Genesis Gold Group's free definitive gold guide today or give them a call at 1-800-200-GOLD. That's 1-800-200-4653. So there are more than 130 FDIC insured banks that have ongoing or planned crypto-related activities, and risks from crypto and new technologies require a whole of government response, according to reports by bankingdive.com. And in addition to that, there are about 52 million Americans who have invested in crypto, myself included. Now, according to the policies and procedures for examination and the FDIC guidance on digital assets for banks, their focus is to maintain consistency with those of other regulators. And not only that, but the FDIC issued a joint statement last month alongside the Federal Reserve and the Office of the Comptroller of the Currency, warning financial institutions of the risks they are exposed to when dabbling in cryptocurrencies. And the regulators followed that up last week with a reminder on crypto liquidity risk. So now would be a great time to remind you all of my 3 financial pillars: diversity, security, and cash flow. Comment down below if you remember what happened a few months ago back in November. The November collapse of crypto exchange FTX revealed that 11 banks were doing business with the platform and ultimately suffered by association. There's that pillar, folks: security. Please tell me you have your cold storage wallets, and if not, you are just waiting for them to show up in the mail. All right, folks. Now, what do you think these 11 banks have been preparing for since November and their involvement in the FTX crash as a way to recoup their losses? And the FDIC doesn't even have enough in liquid assets to cover all the insurance on private accounts up to the $250,000 or $250,000 maximum limit. So we have to be realistic about their ability to provide any form of recovery to these victims. And FTX wasn't the only blow where millions, if not billions of dollars have been disappearing. And the BlockFi collapse, as well as the Three Arrows Capital's collapse in June of 2022, all of these were arguably just as damaging. And I'm going to read this to you folks directly from the FDIC's website, where it says, The banking industries continue to face downside risks from the effects of inflation, rising market interest rates, and continued geopolitical uncertainty. These could hurt banks' profitability, weaken credit quality and capital, and limit loan and growth deposits. Well, there you have it. And these risks will be matters of continued supervisory attention by the FDIC. So I'm not going to sit here and tell you that based on what has been shared and the actual facts and evidence that we have all seen on the FDIC's meeting video footage, where they clearly stated what will happen, that all these banks will close in just 2 or 3 days from now, this Friday. But what I am telling you is we must prepare. And as expected, I would be willing to bet that many of you might be wondering what the banks do with your money while it's sitting in your account. But more importantly, what happens to it when a bank has to close down? Well, according to my research and according to the Federal Deposit Insurance Corporation, the FDIC, there have been 561 total bank failures from 2001 through 2022. And the majority took place during the recession from 2008 through 2011. Well, what do you know? Banking CEOs, analysts, and expert economists are all calling for just that here very soon. A recession. Very odd timing, don't you all think? So according to NASDAQ.com, the vast majority of banks are insured by the FDIC, although some choose smaller deposit insurers. So I would encourage you to check with your banks to see if they have chosen to insure your funds and deposits, retirement and life savings and nest eggs with some alternative insurance system, one that may have even less of a foothold on their finances and ultimately lack the ability to cover all the accounts in the event of a banking collapse. And yes, I know what you're asking. This includes credit unions as well. Now, if an FDIC insured bank fails, the government-backed agency protects consumers' money by selling the bank to another financial institution or paying depositors directly up to $250,000. And with that being said, comment down below if you would exceed that $250,000 mark that the FDIC would insure your bank account for. Meanwhile, NASDAQ.com stated that if your bank is sold, your money is typically available in your new account within 2 business days, and your terms and conditions stay the same. And this based on what Levin Galston, CPA at the Oakview Law Group, said. So remember the pillars, folks: diversity, security, and cash flow. Most importantly, diversity and cash flow, as if they say 2 business days, expect more like 4 or 5. So I would make sure I was liquid and diverse in all forms possible, because you just never know. Plan for the worst, hope for the best. But remember, hope is not a plan or a strategy. Because Galston added that, however, it may take longer if a large number of depositors are affected by the bank's failure. Additionally, if you have direct deposits set up through your current employer, they may or may not make it to your new bank account and could even be lost for some time in the transition of bank ownership changing hands. So if your bank is acquired, although you shouldn't need to take action, it will be best to stay on top of it all, or else you could be in a world of hurt. And I'd hate to see that happen to you. Your deposits should be redirected automatically to your account at your new bank, but we all know how banking glitches can happen. Remember the Bank of America and Zelle disaster just a few weeks ago? Bank of America was pointing fingers at Zelle, and Zelle was pointing fingers at Bank of America. Meanwhile, the account holders were left in the middle of it all, holding the bag, with account balances near zero, at zero, and even some negative and overdrawn in the red. Unable to buy gas, food, groceries, pay rent. They were literally wiped out overnight. Now, Galston also said, in any case, it's a good idea to keep track of your direct deposit information and to update it as necessary if you change banks or if there are any changes to your bank account information. And this can help ensure that your direct deposit continues to be credited to your correct account and that you have access to your funds in a timely manner. So please keep in mind that direct deposits and pending transactions differ during a bank failure. And I want to share with you what Dennis Shershikov, a finance, economics, and accounting professor at the City University of New York and head of growth for Awning.com, had to say. And folks, Awning.com is a website and company that uses tools to search or analyze rental properties, and it has a collective team of experts that assist investors to buy, furnish, or manage their next investment property. And Shershikov said that Transfers and checks in process may be returned unpaid, and that you may need to make alternative arrangements to cover any outstanding payments or bills. Sheesh, man. This sounds like it's going to be a nightmare. And with recent instances, case studies, and the likelihood of history repeating itself with the story that I brought to you about Wells Fargo and their $2 billion wrongdoing settlement for account holders, I can only imagine how many people with very little money, resources, and zero diversity being clobbered during all these banking failures and seeing what little assets they have taken away from them, being evicted, foreclosed on, and having their automobiles repossessed while the banks slowly process all these failed transactions. Now, although bank failures aren't common and may not necessarily happen to your bank, they still happen from time to time. And this can be whether or not due to poor management, economic downturns, regulatory issues, fraud, embezzlement, or cybersecurity breaches. But thankfully, there are several things you can start doing to protect your money from that risk of total bank failure, collapse, and closure. This can include spreading your money out across several banks as a starter. So if you have more than $250,000 in an FDIC insured bank that fails, you can receive a claim against the bank's estate for the extra funds. But according to Shershikoff, it's much safer, though, to spread out your assets across several institutions so you don't exceed the insured amount. Not to mention that the banks may initiate bail-ins, which means that your claim against the bank's estate would be virtually useless for immediate needs of covering your basic necessities and monthly reoccurring expenses and obligations. Most importantly, stay informed. By staying up to date on the latest and most accurate financial news and trends, can help you spot warning signs of instability at your bank so that you can make the best decisions possible for your accounts. Some warning signs of potential financial trouble for a bank may include declining stock prices, negative news reports, management turnover, or regulatory enforcement actions, all of which I cover on a regular basis on the videos that I put together and publish for you all to watch. However, it is important to note that a bank's financial condition is complex and challenging to understand fully from the outside. And speaking of stock prices, I would be remiss if I didn't tell you that you can get free stocks by clicking the link in the description below. A great way to diversify and secure great opportunities for cash flow. And I don't know about you, but I also like free money. So there's that. Everyone, I truly hope you all find this information helpful, educational, and useful, and I look forward to seeing you all back here again on my next video. Please make an investment in the like button and help me reach my goal of hitting 70,000 subscribers soon. All of you helping to share these videos is paying off dividends in sharing these important updates, the facts, the warning signs, and most importantly, helping everyone prepare and having access to the truth. You all take care and be safe. And until next time, I am youtube.com/@Kevin247, Kevin Prepper, or just plain old Kevin in all caps. And I'll see you all real soon. Take care.